Welcome to Secure Money Mindset, where seasoned advisors cover the topics that matter most to your financial future. Each episode is packed with practical insight, real conversations, and guidance you can trust. Let's dive in.
Welcome back to the Secure Money Mindset podcast. I'm Isabelle David, and today I'm joined with Nate Borrmann, a financial advisor here at Secure Planning Group.
Thanks, Rob.
Yes, Nate, welcome. So we are officially past the halfway point of 2026, which makes it a good time to pause and ask, what has changed since January? And does your financial plan still reflect where you were back then and where you want to go? Today we're looking at that question from 3 different angles. We're going to look at the market outlook, your investment portfolio, and for our business owner listeners, your health and direction of your business.
A mid-year review is not about trying to predict every headline in the next 6 months. It's about stepping back from the daily noise and looking at the bigger picture and make sure your decisions still support your long-term goals.
Allison Weishock, another advisor here at Secure Planning Group, recently did a 2026 Midyear Outlook webinar, which was based on LPL's mid-year research, which kind of talked about policy, build-outs, and bottlenecks. For anyone who missed it, it's on our website.
Yeah, some of the high-level stuff was, a new Federal Reserve chair. We saw the conflict in the Middle East pushing oil prices higher. And despite those challenges, the stock market has continued to climb. Inflation, has been pushed higher largely by, the conflict in the Middle East. And when we're looking at LPL's research's base case, they're not looking at a recession. Resilient household balance sheets, a low hiring and low firing labor market, and continued business investment remains supportive. And the second half outlook remains constructive. But, as we always say when we're talking about equity investing, the volatility is sort of the price you pay. Like that should be something that you expect when you're an equity investor. So that's not going to be anything that surprises us coming up here in the second half.
Okay. So again, Allison, when she was doing that webinar, she highlighted 4 main themes that are going to shape the rest of the year. Can you kind of give the listeners a brief overview of those?
Yeah. As always, the midterm elections are always going to be something that, is an interest to the market. I'm just going to cover these really high level. Go check out, Allison. She did a really great job. The midterm elections, LPL Research's base case is a split Congress after the midterm elections. So a divided government could limit major legislative changes while increasing uncertainty around government funding, the debt ceiling, and regulation. Midterm elections historically bring additional volatility. So, when we're looking at the outlook, that's something that we just need to, expect going forward. We're also looking at artificial intelligence. I feel like every headline you see at this point is talking about AI. AI investment remains a major source of business spending and economic support. And the market's focus is shifting from what companies are spending the most to which can generate sustainable returns from those investments. So that's something to keep an eye on. I'm sure you already are if you're listening to this or watching this. And then another thing that I found really interesting was when Allison was talking about resource nationalism. And I'm going to touch this very briefly because you should really go check out what she had to say about this. It's really interesting. It's that governments are increasingly treating energy, metals, and critical minerals as a national security asset. So looking at the effect that has, and then also looking at, the effect that Kevin Warsh is going to have going forward. He's just historically favored a smaller Fed footprint and a leaner balance sheet and less forward guidance. With inflation still above target and geopolitical uncertainty elevated, LPL Research expects the Fed to remain on hold for much of the rest of the year. So I think those are some things that we should really be, paying attention to. Allison went into a lot more details on that. So check it out, and then we're going to dive into some more stuff here.
Yes. But just coming back to those themes one more time, for the everyday investor, what do you think that they should keep in mind?
LPL Research expects the bull market to continue. This is supported by earnings growth. I know there's a lot of noise out there in the market. That's going to be a theme as we talk, going forward, like rising above the noise, and looking at, things at a more macro level. And also, as I mentioned earlier, pullbacks are a part of a normal bull market and can occur even when the long-term backdrop remains constructive. So even when there is a lot of volatility, even when we have all of these, major economic things and geopolitical things going on, pullbacks are a normal part of that, but that doesn't, necessarily mean it's all doom and gloom. And then in these times, diversification is especially important after strong gains in AI-related companies and as an opportunity to broaden to other sectors. And then, as I mentioned with Kevin Warsh, the Fed expects to remain largely on hold. So bond returns may be driven more by income than price appreciation.
Okay, yeah. So again, this was kind of just a brief overview of what Allison talked about in the 2026 Mid-Year Outlook webinar. For the full webinar, check it out. It's on our YouTube channel and our website. She goes into a lot more detail. So Nate, understanding that outlook is helpful, but let's take a step back now and think about the investors. Where should they begin a mid-year review?
So they should begin with their plan and not the headlines. I think zooming out is one of the best things that we can do for our financial plan, because when you're just looking at the day-to-day headlines, a lot of those headlines, they're negative, they're doom and gloom, and they're really focused on the small things that are happening, this minute, this hour, this day. But we want our decisions to be informed by our goals. So what does that mean when we're talking practically? It means looking at whether the mix of stocks, bonds, real estate, and other investments remain aligned with your goals, time horizon, and risk tolerance. And it means considering life changes. So if you're someone who's approaching retirement, or you've had a job change or a major purchase, looking at the risk you're taking on with your investments, or looking at, the mix of investments you have is really important, because, the needs you might have had, 6 months ago might not be your needs now, and your needs, that you were expecting, you might have been expecting to sell your business in 2 years, but, now it's really taking off and you want to keep going, you want to be there 5 years, or, maybe you were planning on exiting at 5 years and, the situation means that you should be exiting now. So that's probably going to inform that you position yourself in a different way. So, looking at it mid-year is a really great time to zoom out, stop looking at like those day-to-day headlines and see, does what I'm doing on a macro level actually align with what I'm trying to do?
Yeah. And getting caught up in those headlines can definitely overwhelm somebody. So taking a step back is probably a good idea.
And part of that too is portfolio drift. With the strong run up in AI, there might be certain segments or categories, that have run up and just performed really well, which, never going to say it's a bad thing. Yeah, something's performing well. But it just might mean, rebalancing and making sure that, your diversification is still, in line with what you're trying to do.
Yeah. So our recent mid-year money checkup blog recommends looking closely at both high performing and underperforming. How should an investor approach that?
They should look at it like strong performers. It doesn't determine that investment is a fit for your plan. So just because something is performing well doesn't mean it's going to perform well going forward. And just because something is performing poorly right now doesn't mean it's going to perform poorly going forward. It could. But, taking a deeper look at those things, and, talking with your advisor if you do have a position that's, heavily concentrated, talking about the things you could do with that, or, talking with your advisor about, things that are performing in different ways. This is typically more for someone who has a lot of concentration in a position, whether that's, they've had a stock for a long time, it's appreciated a lot, or they've received a lot of, stock in their company. It's a lot more focused on those sorts of people versus someone who's more broadly diversified.
Yeah.
But it's still always good to look at past performance as an indicator of future performance. So, taking a look at, the fundamentals and the outlook for the company going forward is a much better indicator than, did it do well from this day to this day?
Yeah. Okay. We've talked about reviewing your investments and making sure your portfolio aligns with your goals. But if you're an investor who also owns a business, your mid-year review shouldn't stop at your personal portfolio. Your business may be one with more significant assets, and your decisions you make could also affect your personal growth.
Yep, that's a great thing. That's why you should really take a look at these things mid-year as well. It's not just diving into your personal portfolio and saying, how much of this holding do I have? Is my mix of stocks and bonds all properly sorted out? It's also taking a step back and looking at, how has my business done so far? And it's, it's very similar too, because, when you're in your business on the day to day, you're working in your business, you're a business owner, so you put a lot of time into it. So in the day to day, you might be missing some of the more macro things. So taking an intentional step to look at the big picture is really important. So looking at things like revenue, margins, cost, and understanding where the business has momentum and where it doesn't. So something you might feel on a day-to-day basis might not necessarily be reflected in those numbers. And, something that you might feel like you're really working hard on, you're not seeing results, you might take a look at your revenue and be, surprised at where you're at. And then also compare actual results with the original plan, just like with your personal portfolio, saying, this was my goal. Am I aligned with my goal? And how does that inform the way I approach the second half of the year? It's also important to understand your cash flow. Map the timing of incoming revenue, major expenses, as well as seasonal pressure points, and determine whether your current liquidity and reserves are appropriate. If you're someone who has a more seasonal business, or there are just, big expenses on the horizon, or, they might have a big case you're working on or a big project you're working on, just looking at how that, plays into the whole of your business. And then, plan for the second half. Project those upcoming cash needs, like we just mentioned, plan investment, access to liquidity, as well as consider hiring, equipment purchases, expansion, tax payments, retirement plan funding, and other year-end priorities. And I feel like the summer is always a really enjoyable time, because it feels like, for a lot of us, it's a little bit, slower. The end of the year does creep up on you. So making sure you're ahead of your tax filing deadlines, making sure that you have all your reporting and your retirement plan contributions ready. It's a really important thing to do now. It might feel early. I feel like it all feels early when we're talking about this. We're recording this in July, but at the end of the year sneaks up on you. So
definitely
prepared, and then finish with intention. This focused mid-year review can help you as a business owner make decisions with greater clarity and confidence, and also consider how business decisions affect the owner's personal portfolio and broader financial picture. That's where a financial professional can help with that. Make sure that your personal goals are aligned with your business goals, and your business goals with your personal goals. So making sure that those are all, playing together properly, because, you don't want to be taking too much risk in one area, or, you don't want to be leaving money on the table. There's a lot of things that, as professionals, we can help synthesize the planning for, an individual who works. They have personal assets as well as, they're working in and on their business.
Yes. Okay. So Nate, taking a step back, if listeners were to take away one thing from today, what should that be?
It's the noise. The mid-year is a decision point, but not a prediction contest. So, a lot of people see it as a time to place their bets and things like that. But, use it as a decision point and understand the environment, step back from the noise, look at the macro environment, and return to your goals. And then use those goals to adjust your plan. Tweaking things on a day-to-day basis, or just because you hear this, that, and the other thing, and changing your plans, that's where your plan starts to drift. Whereas if you're coming back to your goal and then using that goal to inform the way you invest and the way you plan, that's really going to go a long way for you.
Perfect. Yes. That's good information. If you need help reviewing your portfolio, please reach out to your advisor and we can help you build out your strategy. If you're new here to Secure Planning Group, please reach out to us directly, and we're happy to set you up with the advisor that we think is right for you. Nate, thank you so much for joining me today.
Yeah, you're welcome. Everybody enjoy the rest of your summer. Happy mid-year planning.
And again, thank you for joining us on Secure Money Mindset Podcast. Be sure to subscribe to our podcast and our YouTube channel, and we'll see you next time.
We hope you enjoyed today's episode of Secure Money Mindset. For more, search Secure Money Mindset on Spotify or wherever you listen to your podcast, and watch full episodes on YouTube. Thanks for listening to Secure Money Mindset, where financial security is a state of mind.